Good morning. Today's Monday, October 27th, 2014. This is Dan McElwee bringing you Ventura Wealth Management's weekly economic newsletter, The Profit Margin. We begin with our statistic of the week. Cybersecurity incidents are on the rise across the globe. In 2010, there were 9.4 million instances of these types of crimes. In 2014, 42.8 million are expected. There are more than 117,000 cyber attacks across the world on a daily basis. China's GDP had its worst showing since the financial crisis in 2009, our global perspective shows. The third quarter reading showed an annualized gain of 7.3%. The economy is being slowed by business overcapacity, high debt levels, and weak housing figures. Housing starts make up our chart of the week. New home sales ticked up for the month of September, rising 0.2% in the month and 17% year over year. This was the highest volume of sales since July 2008. New home prices, however, declined 4% year over year. And now for our commentary. Volatility is a word that gets thrown around quite a bit in our industry, but mostly when equity valuations are heading down. Last week's market action demonstrated that some volatility can have a positive connotation, as a sense of, maybe temporary, relief came over the markets. Equity indices had their largest weekly gain since January of 2013, with investors taking a closer look at mostly positive earnings and gleaning some comfort from Fed statements regarding liquidity. The S&P 500 snapped a 4-week losing streak and rallied a staggering 4.14%, while the Dow gained 2.64%. Not to be left behind, the Nasdaq picked up over 5%. The 10-year Treasury retreated, closing the week with a yield of 2.29. What has caused higher volatility as of late? As the Federal Reserve ends its bond purchase operations this month, many investors have grown concerned that liquidity would dry up and global growth would slow. And while global growth is anemic, growth in the U.S. remains stable. Corporate earnings have been largely in line with expectations, and, no surprise here, Fed officials have signaled a willingness to prop up the system again if need be. These topsy-turvy feelings have left many feeling seasick. In the week ahead, there is a FOMC meeting Wednesday, and we will see the first GDP release for the third quarter Thursday. Any surprises in these news events could move markets. Investors are still wary. Now we look to the week ahead. Monday, we have pending home sales and the Dallas Fed survey. Tuesday, durable goods orders, the Case-Shiller Home Price Index. On Wednesday, we'll have the Fed meeting announcement and the petroleum status report. Thursday, jobless claims and third quarter GDP. And Friday, personal income and outlays, consumer sentiment, and the employment cost. Thank you and have a great week.